May profits be upon you. We're going to look at the Euro USD. Euro USD. Welcome back to my YouTube channel. Let's take a quick look at the RT Money Meter. The RT Money Meter has the US dollar ranked at number one, moving kind of sideways since last week, right? From 839 to 790, still the strongest of the currencies. But the euro was ranked number 5 last week at minus 779. This week is ranked at number 3 at minus 679. And it actually is moving up. Yeah, actually getting stronger, and this is one of the strongest ones already. These two aren't exactly the greatest pair to put against each other right now as far as weak and strong is concerned. But thinking about the fundamentals at play and the with the Fed interest rates and a hot inflation rate, with those items that came last week, I'm inclined to think that the U.S. dollar is going to get stronger, and that's where I'll base that's where I'll have my analysis going forward. This is going to shape my analysis looking at these technicals. Now watch, on the 3-month, I want you to see this. See this little area here? That's what price is reacting to right now, and we're actually eating through that. We wicked down 3 months ago. This is a 3-month candle. We wicked down through it, right? The next 3-month candle pulled up, and now we're filling the wick of that the previous candle, right? Which would mean we're probably going to take this low. All right, we're probably going to finish taking out this demand zone, and we're probably heading down to this one here. All right, there's a lot of imbalance there. So once we get a break and close below the previous candle's low, 3-month candle down, we'll probably see movement to the downside in a bad way. All right, in a bad way, because never in a good way. Okay, let's go to the monthly. I mean, to the weekly. Sorry. If we go to the weekly, only thing I'm going to point out is this was the COVID low, right? 2020, and we banged through that. This was a pivotal low made in 2016. All right, this was the swing low that we finally took out. This is a very bearish market, folks. Make no mistake about it. And that's red line is just telling us that we took liquidity from the low of that demand zone that I pointed out earlier. All right. We go to the daily now. What can we see? Just marked out where we're taking out the daily swing lows. All right. And we're making good, clean price action to the downside with lower lows, lower highs, and lower lows. This is the last pullback, the latest, the most recent pullback into this daily downtrend, which seems to be being respected. All right, and we pull back above the 50% equilibrium, if you will, of the trading range, top to bottom. Right? And this is where you would want to look for sells. This is also where you would want to look for that next structural point, which is a lower high, and we're looking to make the lower low afterwards. All right, you with me? Good. Let's go to the 4-hour. This is where we make our money. This is a little tricky. I want you to hold with me now, because again, this is the daily swing range that I was talking that just showed you, and this is the swing high to the swing low. This is the pullback, and I'm pretty sure this is going to be the lower high that we're looking for. Why? Because it broke structure from this high. It broke market structure to the downside. That usually means this pullback is over. All right, it's highly likely that the pullback is over. So we're coming down. All right, find this demand zone here. price is reacting to it and move sideways. Right. This is where we got all that news. We had uh, all kind of fundamentals going on, with CPI data, and then the recovery of the markets, and the near-term weakness shown in the US dollar. And then we are now moving down after this correction, right? But what you want to notice is that we took the low of this demand zone here that all this price was buoyed on, right? Price floated it, and then come news time, it came down, took out that low, swiped all the liquidity from those lows, and then went up and took out that high, right? Leaving some relative equal highs up here. Very interesting to me. Why? Because from here to here, this trading range, we came back to the equilibrium, all right, just shy of the 50%, but we left relative equal highs at that zone, which would draw a price up, right? But there is an imbalance zone down here, a demand zone, an unmitigated fresh demand zone. Okay, so what does that all mean? What it means is keep your head on a swivel, because this is a range of price, and what you saw here is accumulation, manipulation, sweeping on both sides, took out buyers and sellers stop losses, right? And here we are back to the middle. This is where you want to be careful. I like to avoid the chewy middle of ranges. You want to take the edges on ranges, buys from the edges from the bottom edge, or sells from the top edge, if you're going to do it, right? If that's in your trading plan. I don't want to trade that, really. All right, I'm looking for sells, understand? And what I'm going to look for is maybe a drift up into this zone, right? And then a continuation of the bearish trend, the overall bearish trend in this market. I'm looking for clean sell setups. I'm going to be aware, I'm going to be mindful that price could pull right back into this and maybe manipulate here. We're going to mitigate this zone, this demand zone, and still keep the trend intact, and then come down, sweeping liquidity along the way. That's a potential scenario. I don't want to take buys or sells from this chewy middle. You understand? I want to see a clean setup. I'm looking for 15-minute confirmation entries for shorts. All right. If price takes out these highs, then I'll be looking for shorts up here. You understand? I'm looking for shorts. I'm not looking to take a buy from here, a buy to the sell. I might, if it's clean enough, but I want to wait till supply is taken out first here, and then pull back, and then I'll take that. Then I'll take it. I'll consider taking it, put it that way. But I'm looking for sells, folks, first and foremost. So that's where I am with the Euro USD. I want you to be careful with this, because you can get caught up taking trades here, thinking that, oh, it's a bullish engulfer here, and we're coming back to test it, and we could shoot on up and everything. That sounds good on paper, but in a range, all the rules kind of switch to kind of change on you. Bullish engulfers and bearish engulfers don't usually act the same way, because price is going to be manipulated on the outsides by market makers, sweeping liquidity here, sweeping liquidity there, and then they'll give you the intended move. You understand? I'm going with the overall bias, which is bearish. All right, I'll take the sells from here if they present. If price gives me my setup here, I'll take it, as long as this high is respected, because there is potential for price to want to go up to here. There is potential for it, so keep that in mind. All right. I'll see you in the next video. Check out my FX futures breakdown. All right. On the individual currencies to find out which one is actually weak and which one is actually strong. All right. I'll leave it on your screen right now and I'll see you in the next video.